Hey folks, Dan Frio here with your closing bell for June 3rd, 2025. So mortgage rates, they did absolutely nothing today. The reason for that is we really had no news out that would change interest rates. We did have some good news on the jobs front, and that caused the stock market to go up a little bit today. But on the bond market, it was flat as a pancake. We got basically the MBS market up more down 0.01, nothing to write home about there. And the news today was the JOLT index came in a little bit favorable or more favorable than the markets expected. But tomorrow we have ADP giving us the payroll numbers and how the job market's looking. So we're going to look at that data in a little more detail, and then we're going to look at home prices. And it's not always gumdrops and whatever people say, because I am going to go over some areas in Florida that are going to get hammered right now. So without further ado, let's get to today's news. My name is Dan Frio. I do this report 2 times a day to let you guys know what's going on with those things over there. And the reason being is I'm a federally licensed mortgage loan officer. I work at a federal bank. Yeah, that's what I do. And the slogan we have here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how in the world could we do that? I'll give you all that information at the end of this video because you're here for these things. So let's get to it. So we had the opening bell today, and what happened is we had JOLTS, the JOLTS number. This is job openings and labor transfers. They came in a little bit better than expected. So that had a fury at the beginning of the day. If you look at the bond market right out of the gate, it was up about 14 ticks, and then it was down away, and then it kind of recovered, and basically we ended the day flat. So that's what we're seeing in the bond market. Tomorrow we're going to get some other information I'll go over with you here in a second. But we did have a couple Fed speakers come out today, and that's what prompted some news. But across the board on the indices, we have good news there. We have the Dow Jones up 200 points and the NASDAQ up 150. We got the VIX down 3%. So that's helping the anxiety level on Wall Street. You go down through here, here's another Fed official coming out. Fed Governor Lisa Cook sees tariffs rising inflation, complicating the rate picture. And that is basically a broken record all across the board. And I kind of give you guys the same things. You can't really predict what's going to go on with inflation if we don't know what's going to go on with the cost of things. So until we get that data, there's really no need to go over through anything else of the other data that we have. But let's fill in the rest of the blanks that we're going to focus in on. So what we're going to focus in on tomorrow is the ADP payroll numbers. They're going to come in, and you guys know how I feel about this. And a lot of people are coming back saying and giving me grief about the ADP payroll numbers. But guys, let's just look into the previous numbers they have. Let's just see, basically we're going to do this live. I didn't look into this yet, how accurate their numbers are. So let's get down to this and see if I should be trusting their numbers or not. Let's go a little bit further because I love data. Okay, so let's get over to here and see what was expected. So right through here, we're going to say, here's where the forecasts were previously, and here's what the numbers came in. Well, let's see how accurate ADP did since last June or June of 2024. So it was 173. How close was it? And it was kind of close. We'll give it, say within 20, 30, say within 20 or 30,000, we'll give it a thumbs up. So this one, thumbs up. This one, thumbs up. This one, thumbs up. This one, thumbs down. This one is thumbs up. This one is way off the marker. This one is close. Thumbs up. Thumbs down. Way off. Way off. Way off and way off. So the last few readings were way off, and they also had previously adjustments. So I'm not all keen on the ADP payroll numbers, but if you guys like these numbers, they will, or if they're kind of way out of whack, they will skew the markets. But then on Thursday and Friday, we start getting the government numbers. Now, I get a lot of flack down below. You guys don't even trust the government numbers, so I don't really know what numbers to give you guys. So without further ado, let's get to home prices. Okay, so we just had breaking news right now, June 3rd. We had the economists, and here's what you guys are going to say. The economist that works for who? The Realtor Association or the National Association of Realtors came out, and he's saying, folks, you're not going to see a crash in the market. It's not going to be anything crazy. We might even see house gains of about 3%. So should we take his information and his forecast seriously? How accurate is he normally? Well, that's kind of what I did in the background. So I did a whole bunch of research on this fella, and here's what I came up with. Here's the data. Here's his forecasts. And here's what really happened. We're going to go all the way back to 2017 so you guys can see how his forecast came out. So let me get my head out of the way for a second so you can see the whole screen. So here we go. So in 2007, this young fella, he said the forecast in number of home sales, he forecasted 5.4 million homes would sell. It came in at 5.5. He also said home prices would increase by 4%. They increased 5.7%. So let's go down through this trend. We're going to see how he's, compares here and how he compares here and what that trend looks like. So in 2018, he said 6 million and it came in at 5. Well, he was way off there, I'll say. 2019, 6 million and it came in at 5. So I'll say that was off as well. So then you got the 5.5. He's getting a little closer here. He did pretty darn good here, a little bit off here and so forth. This is the number of units being sold. So if you're interested in that, okay, great. Let's see how he does on predicting what the prices are going to do. Is he normally way over skewed? Because the first thing you're going to say is, well, he works for the Association of Realtors, so he's going to give us all this, rosy data to make everything look good. Well, let's look at the numbers. So here's the appreciation. So in 2017, this young man said the house prices would appreciate 4%. They came in at 5.7. The next year, he said they would go up 4.7. They actually went up 4.9 ahead of what he said. The next year, he said that they were going to go in 2019, they'd increase 3.1%. What did they do? Well, they went up 4.9%. 2020, this is when a lot of people were getting a little scared there. They said house prices would go up 2.7%. It went up 9%. 2021, this is where everything kind of just went off the rails. 2021, he expected them to go up 5.7%. It went up 18%. Then the next year, he said it was going to go up 5.7 again. It went up 10. The next year, he said it's going to go up 0.3. It went up 0.8. Do you get the gist of what I'm saying here? Every year, he's predicting numbers that don't come close. Actually, he's underestimating what's going on with home prices. So he's coming in now saying prices are going to go up 3%. What are they going to do? So I just wanted to give you some feedback on what his data is providing. So just want to give you the accuracy so you can look him up and figure out what he's talking about in your area. But then let's go over to Florida. And here's what I want to talk about. I'm not always telling you guys house prices are booming everywhere. Florida is going to get whacked and many areas are going to get there. I would say if you're looking to buy down there, wait a little bit longer and you might see some more deterioration. Let's go through some of the areas that are going to get blasted and then maybe some silver lining at the end of this. So if you go down through here, it is saying that the Florida housing market is going to have its struggles. Okay, down through here, it's even saying, according to the latest figures, year-over-year national home prices have cooled a bit, down 2.5%. That's a slowdown from 2.9%, the median home price and so forth. If you go to Florida, it's saying there's a good chance this is going to absolutely go negative. Okay, and here's what the numbers are. I'm all in, but I'm not all in for the whole state of Florida going negative. I'm in for some areas going negative. What are those areas? Well, let's kind of zoom in a little bit. And this is what this article tells us. I'm giving this kudos to Norada Real Estate Investments. But if you zoom in on some of these, Winter Haven, Florida, closer look at the risk. It saw a peak around 330 in mid-2022. Then the prices fell back to 300,000. There was another small peak at 320 and then a similar trend on the downturn. So go to their website and I'll try to put this link down below. You can see a lot of the data that they're providing us. I don't want to just go through page by page and letting you guys know, but here's another area, Tampa, Florida. It's a big city with big concerns. He's expecting those areas to go down as well. Pace for the inventory increase, supply is increasing and outpacing the demand in Tampa. That's what you really want to see. You don't want to just see housing inventory going up or ramping up, because if you look at history, we're not even close to where we were pre-pandemic. But you also have to look at your area. How's your area faring? I actually took a bike ride around my area yesterday, and there's more and more homes popping up. And what's that going to do to prices? It's going to stagnate them, because there'll be more and more houses coming to the market, so you can choose, what you want. Versus if you really want to buy in an area, you're stuck with maybe a small amount of inventory. But what's really driving the risk in Florida? Well, Fort Myers, down 5.3%. Punta Gorda, down 4.1. Sarasota, down 3.6. Here's what's happening. The prices skyrocketed. Mortgage rates skyrocketed. Ownership in Florida also went crazy. When you're looking at the insurances, and if you're renting a condo, the association fees and everything, getting really expensive, and the insurances are running out of, they're running crazy. So if you're looking to buy in those areas, maybe look for inventory to keep rallying up, rates to cool down a little bit. That'll put a little stability on those prices and things, and you might be in good shape there. My take, is it going to crash? This is their take on it. I thought this was interesting here because I did a video yesterday, and I'll try to share that with you guys right up through here in regards to, are we seeing just house market just kind of coming down in values? Are house prices correcting? Are they crashing? Or is it 2008? Check out that video. But this was interesting what this person says. As someone who's been watching housing market for years, and I have been too, I tend to be cautious with the word crash. And I've been asking people for the last 2 or 3 years, what do you define as crash? A lot of people don't really come up with that word or with the terminology, but it implies a sudden catastrophic drop like we saw in 2008. In 2008, I'm considering its own entity because house prices in 2008 in some areas were down 50, 60%. 60%, you imagine, that's a crash. Well, that's more than a crash. I say in a crash is, 15, 20, 30%. A 2008 is a one-in-a-lifetime thing, hopefully. If you're a buyer, looking for buyers, if you're looking to buy in these areas, this should be good news for the midterm. Prices are going to come down as inventory comes up, and just keep watching rates and keep sitting on the sidelines and kicking those tires until you just find that needle in a haystack, maybe. For sellers, you're just going to have to price accordingly. And for investors, kind of the same thing. So be cautious out there if you're looking to buy in many of these areas, but the housing market isn't looking to crash everywhere. And we had this analyst from the National Association of Realtors coming out saying house prices should see a gain in 2025 of 3%. I'm still saying it's going to be 0. I was completely wrong with this data as well because I've been saying for the last 2 or 3 years, we're going to see 0%. But basically, this is pretty good news for home buyers out there unless you're looking to buy in Florida. So that's our report for today. When we come back tomorrow, I'm going to fill you in with how the ADP report comes in, how that's moving the stock market, and how it's moving the bond market, especially these things right over through here. So now let's get over to what I am and who I do and what do I do for a living. So I told you I was a federally licensed loan officer with a slogan, one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, the lender I work with, or the bank I work with, and this is one of the reasons I came here, is they're offering that we can use 33 other lenders kind of in our stable of lenders we can use. So how does this work? So when you're out there and you're trying to buy that first house, you're looking to refinance, you're kicking the tires to try to find who's got the best programs for me and who's got the best rates and fees. Well, you go out there and you kick the tires at 3, 4, 5 different places. You put in the applications, all this other stuff, and it gets really confusing. And the way rates change on a daily basis, it's a tough time to lock in as well. So here's what we offer here. We can, by putting in your application right through here, we're going to check with up to 33 lenders on who has the best rates and fees at the time we're looking to lock you in. Now, if we lock in, the good news about this is as well, let's say you have 60 days before you close or 45 days, you're building that house and you're almost there and we lock you in. Let's say rates crash from there, and let's say they go down 0.5%. What can we do? Well, the nice thing is, as long as we're 30 days within closing, we can move you to a different lender and take advantage of those lower rates. So not only can we help you at the beginning of this stage, we can help you even during the process as well. So check out how we do this. Go to therateupdate.com. You can put in your application right above my head over through here. You can schedule a consultation call with me right here. You can even schedule an appointment with me over there. But we do have a site also down here for homeowners looking to refinance. So this is pretty hard to figure out. I'm working on this right now. It looks, there it goes. They just added that in there. If you're looking to apply for our RateWatch tool, what this does is it puts that burden on me. So you've tried to refinance last year and the year before when rates dip and then they went right back up. Let's not miss it this time. So go check out the RateWatch tool, how this will work for you guys. Just check it out. Here's a video and how you subscribe to that right through here. And we also have a ton of videos. Here's just 6 of the over 30,000 videos or 3,000 videos we have on our YouTube channel. So thanks for watching, folks. God bless. I hope you have a fantastic evening, and I'll be back here to let you know how these things change or what happens to these things tomorrow. Thanks for watching. God bless. Be safe out there.